There you go. Mic check. All right. Good evening, everybody. So this is going to be our gains page charting session. We're going to go through basically. I'm going to start with January. I've decided we'll go ahead and start there, and if there's room for extras, we'll make room. This will be recorded and it will be posted inside of the Discord, so that way you guys can look back on this, watch this video, and if you have any questions, like Ivy said, don't hesitate to ask. Closed mouths don't get fed, really. And if it's still disabled or something, just we'll figure it out. All right. Now that being said, we're gonna go ahead and if you guys want to go to the gains page too, you guys are more than welcome to do this. You have to give me a minute because I already scrolled back to today, so we're gonna scroll up to whatever happens after January 1st. I've been scrolling this whole time and we are in May. Okay. It's a good thing. El Shivo, your gains edits are too much, bro. That Potter with the grill. That was epic. All right, let's see where we at. All right, in February, almost. Some of these we're gonna go over, and I'm not gonna be able to see when they bottom, right? So, or some of these might be scalps. I'm not gonna bother with that. Focus on the higher time frame here. So almost there. When you guys watch this back, you'll see how I'm scrolling. All right, we just broke into January. Speed scrolling. Damn, just scrolled really hard and it was only to the 24th. It's impressive. All right, here we go. Looks like we are, I'm looking at January 6th. Damn, the 6th was a really good day. Yeah, we're not even probably making it to fucking May. We might have to do this next week too. Tasty. Probably on Monday. All right, there we go. We made it to the first here. Scroll a little bit past. There we go. All right, so clearly Monday was the second, and looks like the first thing was bought. Let's see if I can see anybody when they bought this. All right, so they played TSLL. Let's look on the 24-hour, and we're gonna go to January, May, February, January. Oh, okay. So January 2nd, looks like they swung those. So let's go ahead and zoom in. I'll put a little tracker here so I know I'm at. I'll go down to the 24. Okay, so that was the 27th. This was Monday, the 30th, 31st. And like I said, it looks like a couple of them bought that possibly the day before. Yeah. Okay. So I think this one is going to be pretty clear, right? I can see this. I'm sure some of you guys can as well. Clearly, their intentions, whether it was to take this after that break. Now, I'm not one to take it. I like to take it off of this box, but their idea, I can clearly see, was to take this from here to there. And that is pretty straightforward, guys. I mean, you look at that upside down, you look at that this way too, candle close, right? We get a bounce there, not always right up against it. The next day we open up and we flush those wicks. And obviously this is where you would zoom down to look for that lower time frame entry because you do have wicks there. Now the first target would be that 50% mark, right? That red candle over here to your left, but you'll notice you close underneath it. So that was a signal to continue or for continuation to the downside into that structure. And to be honest with you, that's a pretty damn good play because afterwards it decided to go into a range starting from or ending. Yeah, so they got out on the 2nd/3rd. And for, let's see, basically until the end of January, it chopped, which is another thing that we got to like remember. A lot of you folks who are new, you're going to be taking a trade typically on a stock, right? We can look at the trade that we just took recently with ARM. As soon if it goes up and we get 161, if I can't find, right, empty space, then the only thing I can do is play it into all-time highs or forget about it. And typically after a large expansion like this, which lasts, you know, again, two large rips is a lot of the time standard for what we'll see out of this. You can go back and back test that. But that being said, when I fill that empty space or when that trade is done, so am I. So you cannot hear. They cannot hear. Here we go. Yeah, are you waiting for candle close to decide, or so what closes are your deciding factor on this trade? So on something like so for that, I mean, for it starts off simple, right? Like most things should, where again, let's do it this way, right? Okay, all right. I think this happened last time, Jesse. All right, now this is what the setup looked like as it was happening. Now we can go to the 4 hour and we can break this fucking down. You guys ready? This is how I'll get my entry. I can explain this. This is easy. Box above, empty space. You drop down. You don't fill that empty space. You retrace a little bit of that candle and you chop, right? Now, take a look at this. You build a box, plenty of taps. You pop off and you fill up the rest of that empty space. You are unable at this point to hold that floor. This could be indicative, obviously, of something that does not have enough buying power. And if it runs short and has no supplies underneath it or no volume underneath it, it's going to slip and it's going to fall. Ivy. Oh my God. Now, I think as you guys can see, we're at cost basis in this setup. Now press play. So the start of this play would have obviously been a candle close or a rejection off of that median. But you do open up underneath of cost basis. So that would have been top shelf sign right there. Now you go to the hourly. And this is what this right here, see, this is attention to detail. And this is why, you know, some people like a job, you know, and unfortunately we all went through, you know, or most of us went through the same school systems where, you know, we were taught to like, you know, you get a list of instructions and you follow them. But when I say attention to detail, that means that, every chart's going to be different. So when I look at this, right, this is the attention to detail that I'm talking about. Previous day, right, you pop up. Now, take a look at this tiny, tiny little variable. How am I selecting contracts? Same way that I do every single time, brother. I am looking at the 24-hour and where that empty space is. So I'll explain this in a second. So can anybody tell me why I could have in advance looked at a potential reversal? Can anybody see it? The gap. Empty space. Floor. Right? Now watch this. Price goes up, fights, fails, right? After a big pop up, fills your empty space. Uh-oh. Well, now it bounces up and it reclaims the floor. Check this candle out. It wicks up, touches the very last green candle right there, and rejects, driving the candle down. Now, this is 10 o'clock in the morning. This is opening price. So when we see a bounce after a gap fill, what should we expect with empty space up above us? We would expect that this floor would get reclaimed. It didn't. What does that tell us? And if we're in a bearish scenario, it's just the same as it and this is tough, right, for a lot of people to get. in a bearish scenario, it's the same way to the upside, right? That we're seeing, or we have been seeing lately. Buyers didn't do their job. That's right. You guys got it. Sellers have control. So regardless of what buyers did, which is expend their energy without result, right? They did not achieve what buyers are supposed to achieve, which is to push price into a space that they can easily, which they could have, they very well could have. They had that opportunity above them. That being said, you bounce, you fail, you fall, you close at 12 o'clock midday up against that floor. Now we could zoom into the 30-minute and you could investigate even further, right? Look at these candles. Not even the wick is able to be recovered. What does that tell me? Sellers have control. So for those of you guys who are new, right, this is experience. You got to keep watching this stuff, and you don't have to go, you could watch what I'm doing right here or go do it yourself, right? Watch how price interacts. This is, you know, back testing in a way, but looking at, okay, where would I take that entry? So where buyers fail, there is a if, like there's a hard line. When you're at the floor, you need to bounce, right? If buyers don't show up, if you don't start accumulating, then you are going to find the buyers you need, and that requires price to fall. So with that being said, let's look, 2:30, 4 o'clock, right? Here's your 3:30 candle. Your 3:30 candle hits the same, listen, hits the same area that allowed you to reverse from 2689 back up to 2740. You hit that same level. What happens? Right? You sit. Next day, gap up, empty space up against what? Let's see where you at. Okay, so you wick up against that floor. You wick up against the floor. What are you supposed to do? So what can we just boil this down? In every opportunity presented to buyers to buy, they fail. You see what I'm saying? You're supposed to be able to grab that floor. In a bull market, that's typically what does happen, right? We could, again, I always go back to the details that are most recent, but ARM, right? Oh, damn, we're rewinded. ARM would be the same thing, right? Where buyers need to step up, especially if they have the opportunity above them to fill that empty space. If they don't, and especially if there's more empty space below you, you're going to fall, right? So it's pushing, sell, and that's what this looks like, right? This is all of this effort to keep price down. And then you blow through that 50% mark. That is a manifestation of the volume contained within that area of consolidation, right? Or you're seeing that volume executed. So with TSLL, I think it's pretty safe to assume why they were doing what they were doing and why they got out when they did, right? That's a period, end of story. They got out, and it looks like this was a 482, 531% trade. All right. So I think that's, let's just go ahead and wrap this one up, right? Reverse it, Terry. So the setup is here, and this is by definition box to box. Okay. So you can screenshot that right there, Ivy.
Done, chef.
So does anybody have any questions? Now, let me get to this part. So with this setup, my target, right, is based on expectations, based on the setup that we see in front of us. The opportunity here is point A and point B, or excuse me, point B and point C. A, B, C. So could you have traded the break below that floor and taken shorter expiration contracts to that median price? Of course, right? Because when you hit that median price, you do bounce. and you do retest. And when you retest, you fail. So just looking at the 24-hour candle, what does that tell me? I mean, all of that we just did down there, you take you come to the table at the end of the day and you say, well, that's where you were supposed to bounce and that's where you were supposed to reclaim. And what happened? You didn't. it let's again, when you looked at ARM, where sellers were supposed to set up, they didn't. So the target to the downside would be 2305, right? That'd be the biggest target, or the clearest target to the downside. And then because of the red candle underneath us at that 27 mark, 27 would be that target. And that would likely be my contract selection. It's really not that hard. It is actually very, very simplistic. Find target, take target. If there's variables like, okay, well, I'm looking at this wick, or I'm looking to take it here. That's where, again, per expiration, yes. I typically like to grab 2 weeks or a week per resistance. This is technically a resistance. And yes, having another week with that retest right there, if you had taken it either on that intraday break or at the end of the day, obviously would have been the move, right? But with that being said, if, I was looking to take this contract off of the rejection intraday and I'm looking down below me, I'm saying probably $26.50, $26 would be the target for this week. And then 23 would be the target for next. And there might be some of you saying, well, it only took 3 days. It only took from Monday to Thursday. Wrong. Wait. Yeah. Wait, what the fuck? We had Wednesday off. There was no Wednesday candle there. Probably because it was January 1st, which is a holiday. But anyway, so with that being said, if the contract at the 2687 or 2650 strike was $5 on that rejection, and these 23s were $1, I'm gonna buy both, right? If you're finding strikes that are cheaper, that are closer, and can give you a better chance of ending up in the money, cool. All right, let's keep moving, guys. I want to try to get as many of these done as we can. That was a good trade, but it looks like a scalp. Tesla runners. That was for 186%. Okay, that was the same play, but with Tesla, which I believe Tesla continued moving down a little bit to that 361. No, it didn't. That's right. That was a ceiling, a floor that we had bounced on before. And you reach to the imbalance of that empty space here in the bottom of that, and then reversed. Build up your empty space, consolidated, and then finish the move. Yeah, you needed to do that. That's a large move right there. Let's see. Tesla, QQQ, Uber call. Okay, that was only 72%. Not hating on it, but we're looking for the bigger ones. Damn, you guys were scalping the shit out of the ETFs. Or swinging the shit out of the ETFs. This is a... Okay, never mind. That Uber call. So green slips, he bought this at... Okay, he bought this on 1-2. So let's see if we can find his setup. All right. So January 1st. Okay. Now that's fucking easy. Holy shit. Great job. Look at that. That's easy money, baby. That's easy money. I shouldn't even have to walk you guys through this one, but you come on now. That's easy money. So this individual bought this on 1-2. And it looks like he had multiple different expirations, or there was multiple different people who traded this. Let's see here. Yep, Uber. Okay, cool. Yeah, so he bought that 1-2. Perfect. Okay, so this one actually is pretty simple, right? On the 24-hour, and this is, some of you guys may not have seen this or seen me talk about this a ton, but we talk about waves, right? Now, I didn't make up the wave theory, but I feel like we finished it, in terms of building a box, inside of that box, wave theory. 1, 2, 3, that's the magic number. We look down below us, we see 1, 2, 3. And so typically on that mark, if we don't see a break, we could be looking to the upside. Now you look directly to the upside, and then the only thing that I see is a green candle over here to 65.17. Now I see continuation possible to the upside all the way to 69, and as well as up in here at 71.50. So a candle close outside of where sellers have controlled the price since the 13th of December all the way to the 26th. They have maintained that wall. The wicks that you see are the 50% mark, the imbalance on the 24-hour. Now, if I go to the 4 or the 2, this chart could change a whole lot. But the 24-hour is the most impactful and straightforward as far as analysis is concerned. So if I see a green candle closing inside of wicks, which wicks just show you where price went, not where it was controlled, maybe where it was rejected. And so because we see 2 wicks near that same area, we could just, and it's at the 50% mark within that space between the green candle, that would be a first target in a shorter time frame play. Now, the whole play here is pretty clear, and I think you guys can probably see this. You have a large move, right? Whatever this, however that happened, you bounced, could not find the buyers that you needed, right? You're always going to retest something, and you retested a wick and failed.
Hey,
Shows
Garrett.
you. Yep.
Quick question. That you ignored that green wick to your left,
Okay. I ignored it,
that one.
or
Well, instead of looking at that for your first potential rejection, you looked at the one up and to the left.
like here?
Yeah, yeah. So why didn't you factor in that green wick directly to your left that's sitting there in the empty space? That one, yeah.
That is that. Oh, sorry. Then I must have been pointing at the wrong thing. That is what I'm talking about. That is the imbalance, right? The 50% mark in between this box and that floor. So yes, that wick, and what I'm saying is on the 2-hour, that could change. That could, in fact, we'll take a look at it, right? So the two
Okay.
hour,
All right. Thank you.
now it's just a box. Which, what's the difference here? You didn't reject. That's what rejections look like. That's what sellers unable. Look, let's dive even deeper. There's always an answer on the chart, folks. Always. Sellers push down, retest, regroup, push back here. This happens here, pretty close to here. Look what you retest. Sellers push you back, but buyers are there. You got your boys with you. So that's where you bounce and you stick. Candle close, 24-hour, up against where those massive or those fat rejections happen. That is a tall tale sign that sellers are unable to defend their land. And the first target, right? Now you go to the 24-hour and all of a sudden this gets a little chalky. And what I do is I try to lean on the higher, right? The higher time frame. And so when I look at this, the way that I see that is that's just an imbalance, 50% of between here and there, and that would be one of the first targets. So yeah, sorry, that was just a mishap on my fault, or my part. And technically, I mean, if you look at it here, it's also a box. So does this make sense to everybody? Let's see, hold on a second. Is he taking requests or just going over profits? I'm confused. When we are going up, we look for the first green candle to the left, or down will be red, or when we look down, we aim for the solid floor with multiple touches. So hopefully I haven't overcomplicated that. Let me find a better stock to show you that on. What was that first one that we looked at? That was TSLL. That's right. Okay. So the first red candle, right? That's what your question is. That first, or that top of that red candle in the 24-hour, that's just like the so think about it this way. Let's flip the chart upside down. That imagine that's green and those are red. That's just like a floor. It's where sellers control the price, or vice versa, where buyers would have controlled the price if that was a green candle. Does that make sense? Does that make sense to everybody? It's everything in reverse, right? When you're going down, you're aiming for the first red candle to your left. If you got your, or to your right if you got your chart flipped, or if you don't have your chart flipped, sorry. So yeah, that's why we see that bounce there at the first green candles to our left there. So when you're playing to the downside, you're just literally flipping the chart upside down. I do it still all the time. So, all right, to recap here, and let's go ahead and see this thing play out a little bit. How impressive is that? How impressive. Look at the levels. Look what you're holding, and look what you hit. I took that away. So, candle close up against where sellers definitely try to control the price, and we'll get rid of, we'll leave that. Empty space over here to our left, empty space outside of that box. And this is what we would call a multi-tiered setup, right? There's multiple triggers. Obviously, moving through the 4-hour box here would give us that target up above of $69, or your 24-hour first green candle to your left. Does that make sense, everybody? That's a good setup. You can screenshot that. Let's see. I think that fills up all the empty space. No way. What a night. Oh my God. What a nightmare. You went up and you sure did fill basically all of it. Let's go to the 4. I would assume my box comes down or my floor comes down. So talk about a graze. You know what I mean? But that's still target based, still would have been a successful play. But man, what a wild rip after that one. And I mean, honestly, I'm one of those people that, and you guys have seen me do this. Once this is done, I'm out. Like if I saw this candle close like that, okay, but if this would be the first play, if it does not reclaim that floor, and I would more than likely be in runners, right? Because I finished the play with runners. So if it didn't work out, I probably already made a giant bag, and it's okay. All right, cool. You can screenshot this. Hold on a second. I'll screenshot that. Oh, Lord have mercy. Okay, and that is our good chart. Go ahead and screenshot that bad boy. When you are drawing the boxes, are you looking for a candle open or wicks to touch the box? So I am looking for points of contact, K-sit. I am looking for candle closes or wicks. If the wick and the candle closes are off the same mark, perfect. So if we see a wick off of where a candle closed, that would make sense because that's an open price, and typically that's going to be a rejection. So should we be taking SS? The fuck is SS? You guys in your lingo. Screenshots. Why do we have to acronym? Oh my God. This generation. I did not know that one. And that's really on you for not keeping me up to date, bro. You and Jorge. Jorge's on vacation, man. All right, let's see here. In this Uber example, when on which candle would you enter? I mean, John, I would have probably, obviously, granted that we found this play, if I saw that third bounce, and again, most of the time when I do analysis, I can only imagine. Right? I don't believe that. I don't know. I'm pretty sure I didn't take this one. I might have. I don't think so. I don't remember doing that. So with that being said, if right, there was multiple entries here, multiple. right? Because where you set your stop loss is what matters. And that's a big lesson I want people to really, really take into, because you guys will ask me, is this too early? If you don't have a good stop loss, probably. If you can find a good one, cool. See this right here? See the gap fill? 1, 2, 3. 1, 2, 3. 1, 2, 3. Or excuse me, well, 1, 2, 3. Sorry. So at that point, we're max tension above this box. Because if you break outside of a box, you're probably going to retest it, right? And if it fails that retest, then that's your stop loss. So could that have been a good entry? For sure. Miss your entry? No problem, right? We could look at the next area where sellers controlled the price, and I can see that. This takes, I think, some eye training. I know this is probably not some, but you can see the candle closes here. That same area that you came up and retested before. So if you got a candle close outside of that, that could make a suitable. But because you have resistances in front of you, expiration matters, right? Especially when you start dealing with the top resistance where you're going to see a rejection, you need to be able to hold through that. But you also had the candle close outside of 63.24 for an absolutely spotless entry. You could have bought that at the very last minute of the day. I believe they traded weeklies on this. I'm not sure if they, but there was obviously more there. So but in regards to a setup, it was a great setup. It's a great setup. 8 out of 10. It's a little bit choppy, a little bit ugly, but with some makeup on. Things that messes me up on entering that 2 hours, I don't see much empty space on the 2 hour. Okay, I'm going to help you out right now, Dave. The higher time frame is where we find the plays. The lower time frame is where we execute them. Intraday or end of the day, but you can't, like, the higher time frame is empty space. So it's empty space. I don't care what the 2 hour says. Empty space is empty space. Now, this is obviously a whole lot cleaner up here, and we saw price explode when it got there. But let's just also just take into account like the story here. All right. And this is something we like to do, is tell a story. Sellers, wick, empty space right there filled, push back down, right? Which is fine. Again, I don't care that they filled that empty space. I care that it wasn't held. And on the 24-hour, you haven't. But regardless of that, you see how much effort is put into holding price down. You see how much effort is put into holding price down. And then when you get where you need to execute, you fail. And what happens when you fail at your job? You get fired. And what happens when you fail at shorting something in the market? You get a call from the bank and they say, give me my money. And that means you got to buy back that stock. And that means that the price is going to go higher if you're anybody with a boatload. And then you're going to make other people get out. And then that's going to make buyers see big green candles and they're going to get in, and that's going to make more sellers get out. And then you're going to end up where they controlled the price in the first place, and you're fucking cooked if you're a seller. So does everybody understand that like story format of the push and the pull of both buy? Like, what would you do if you, big money, right, were trying to keep price down? And when you get to the area where it should, you bounce 3 times. And then you close at the floor with, look at all those wicks, right? Look at every whack, whack, whack. Nothing. You get nothing. Next day, where do you open up at, folks? What's that special little spot? That's cost basis. You wick down, give sellers just a little taste, yum, yum. And then you bounce that shit right back up, use the volume that you opened up at, and you explode. And what you are seeing, like I said, is a manifestation of that story I just told you. It makes for a good bedtime story. My kids fall asleep. Yeah, a gap and go. Yeah. So in the workshop, if you guys have it or have taken it, I have a whole spot that we talk about the opening price and what matters when you open, right? Where you're at. I can remember to this day one of my favorite Tesla plays. Empty space up above, two boxes sitting on top of one another, building. You drop down. It looked like the Nike play almost. Um, and as you closed in empty space, you gapped up to the target. It was like a $15 gap up. The next day, you lost the entire gap. That open, because you did not open on the floor, you opened up against it. They gave them one tiny wick up, wrapped in those buyers. Because what do people do in the morning? Oh, this is gapped up. This is gapped up. And people have like orb theories, and their orb is not attached to anything, right? Their gap and goes are not attached to anything. I know where gap and goes happen. They happen when a price or when price moves outside of the seller's control when they can't handle it, right? Overnight or outside of trading hours. What does that do? What would that do to you? You wake up and price is way above where you shorted. Skirt, you're out. You're probably going to skedaddle, and that's going to, there's big money in there in all of these. And that's, I mean, sometimes just that alone is enough to send a low volume stock up. Hence, short squeezes. So. All right, good shit. Chad, you just popped up here. Papa Chad, do you need something?
Oops.
Oh.
That was the question I asked earlier about that wick.
Oh, okay. I
Sorry, I
I
didn't
thought no,
realize.
I thought you just popped back up. I was like, okay.
No, no, I don't think so.
Always happy to see Chad pop up. All right.
Oh, jeez.
Let's see here. I ruin all of my own recordings. Uber, Amazon. This was a 409% play. Let's see if we can see what this person did. They bought 2 contracts at $22 and sold them for $112 on the 2nd. So we can kind of leave this chart here. Okay. They bought them on the 2nd for that. Oh, okay. I get it. I get it. Let's see. Yeah, I get it. Okay. So this is a lower time frame play, and for the fuck of it, we'll go ahead and go over it. Not a lower time frame play, but this person bought a shorter expiration contract for incredibly low risk. He spent fucking $44 to make $224, which is pretty juicy in my opinion and low risk. And obviously he can afford to do that. Actually, don't need to spend much time on this one at all, because I think everybody in here can probably get the gist. The floor, the build, which again, a build like this is egging sell. It's such a beautiful thing when you really start to get this shit. It's like, oh, okay, that's wild. That's fucked up, right? Red, red. Imagine that was red, now green. Give them a little, give them a little, give them a little. Now you get to turn them into short squeezers, right? You get to turn them into liquidity. Hence the liquidity hunt thing, right? You whip down, whip back up, you're grabbing. What's above you? Obviously, empty space. Where's your first resistance? First green candle to my left, right? And it's basically right on there, but it looks like that wick, which probably tells me that's a green candle somewhere on the 5. But that being said, when you hit that wick, and here's the special little sauce here, because this was a swing. Yeah, he swung that fucker. That's balls right there. But it comes down to this. What's above, empty space, and what's below? What have you lost? Nothing. You built, you went up, you hit that first little resistance, you pulled back, and you bounced, you held. And that is big, right? End of the day, you spend that time consolidating, you open up, 7 p.m., the punchback is executed. 715. You see that first resistance? Look, guys, hold on. Oh, God, that's crazy, isn't it? First green candles to your left will change your life. Those are the perfect targets. You can always expect some sort of reaction to that, right? So, wait, hold on a second. Oh, I'm tripping balls. I thought that we were in the morning. This was after hours, which is even better. You wick down, you tap whatever structure was underneath you, and I could go to the 3 or something and find that structure. Sorry, this was after hours. That's even better. I mean, that's even better. You close up against that next 15-minute candle. The floor or that previous resistance has been surpassed. So, with the very last moments of the market, you're able to set up this big move up. Pre market, you open up, right? And you immediately touch the first green candles to your left again. Now, I'm going to press play here and let's see. Beautiful. Absolutely gorgeous. Now, there's no box at the top, so we typically expect some sort of rejection in that area. Now, what's below us will typically let us know, or how we got there, and where we close will let us know whether we're going to continue moving to the upside. But the empty space was here to here. So I think if I was that person, right at the bell, this is why this system, guys, this is why. This is, I can't emphasize this enough. It makes me want to fucking explode. Swinging into day trades, right? We're some sort of fucking weird hybrid where we're looking at day trading setups, right? Or empty space, but we're doing it in a swing trading with swing trading goggles on. But opening up, you already got the contracts. You bought them for $22. You get to sell them to, I mean, think about it, guys. Where'd you start? Where'd all your friends start? Anybody you know who's in the trading community, where'd they start? Options day trading. 9:30, everybody's trying to get in, everybody's trying to catch some of these. So it is, you have the product that everybody wants. And if, again, we are focused on coming out of areas of consolidation or off of bounces where price of calls have decreased, especially in this scenario, they had weeklies. Ivy, you scared me a little bit with your profile picture. I'm not going to lie to you. That was a little scary. Anyway, so obviously lower time frame opportunity. It did end up moving through this range, wicked up to the top, and just the same way it came up, it came back down. So definitely can see why they took that trade. Pretty damn good trade. Like I said, 409%. So let's see. Oh, that person also got the Uber. Yeah, nice. 280% on that. All right. No shit. All right, so it looks like that Friday was delicious. We saw Coors with a 367% gain on NVIDIA calls, but he bought those for that day. Bought them at 28 cents and sold them for 131 cents. We can just take a little peek at that. Well, that makes sense. Simple 1, 2, 3. I can see that on the 5-minute. Oh my God. I'm gonna lose my mind, guys. I'm gonna lose my mind. Now that we're going through this, it's like, come on, get with the stop taking dumbass trades. Obviously, the expiration on this is a little wild, but if the cost of the contracts is $28, come on. This is a beautiful setup, right? First of all, we go down to the lower time frame, and this isn't quintessential, but you do have a range here. That range has already shown that median price has been hit, right? And we're approaching that for the third time. Look how many rejections come off of that floor. So again, it's just a simple battle, a narration between buyers and sellers, right? So what do we see when we look at this? Sellers step up. They push price down. Where do they need to push it, folks? At least below that previous floor. What'd they tap it off of? Exactly that floor. You completely reverse, and I'm literally a betting man, and I would bet that you fell fast, which would be the indication, delicious, that you were probably going to reverse. Close, open. Oh, look at that. Look at the open. It tells you. It's saying, take me. You're holding the floor already in pre-market. So the only thing you look at the sellers. Is everybody following me, or am I just being autistic right now? Is everybody following? Is anybody else picking up what I'm putting down right here? Because this, to me, this is just re-verification. Not that we need it, but like re-verification, dude. Like this, just keep it simple, man. Keep it simple. Sometimes you're gonna have to wait. Sometimes you might miss them. Sometimes they might not work out, right? Rarely. But if the clearer you see, I mean, and that's the thing is, I've learned this lesson. The clearer they are, the better they are. And I've had people make fun of me for literally being like, well, everybody could see that. Well, then why didn't you take it, dumbass? You know, like if it's simple, if I focus on one thing, I know there's not a lot of guarantees here in the stock market, but to see the same thing, and that's what we're doing right now, over and over again, should have you focused on these setups. I do not know when he actually got in the morning when he saw it. I mean, first he could have gotten in here. He could have gotten in off the top. Unfortunately, I don't see. Let's see. It was 9:56 when he. Okay, so he bought those. I'm going to go ahead and assume very shortly after the bell. And I would assume by the cost of his contracts that it hadn't really exploded. 140 is probably when I would assume he got in. And that two 15-minute candles, basically right at 10 o'clock, he screenshots. I mean, again, these are now, would that be harder for you to interpret because it's on a lower time frame and newer people would struggle a little bit more with trying to execute that? And so I'm not trying to oversimplify what he took years to get to. Okay, Coors is a experienced trader. He's one of the first independent traders to ever come out of Simple Stacks. But with that being said, that's something that he can afford to do. And it's also, there's again levels to this shit. But we go back and we look at the 24-hour, and you're not going to miss anything, right? You're still going to be able to make big guap, large stacks. And then at some point, you'll be able to afford to explore further, right? You got to pack up before you go on a journey. So he took it at that median. I'm going to go ahead and assume so. I can't really tell you for sure, but if he's screenshotting this at 9:56 in the morning, he's in. Are you in here, Coors? I don't think he is. He's in my time zone. So I'd have to ask him if I'm being honest with you. So it keeps ripping unless he's in I know he's closer to the west or the east coast. Again, we're doing journalistic shit, or damn. Look at that. No seller could step up. I mean, just look at, sorry, I'm spazzing out here, but build a box. Don't lose it. So beautiful. So beautiful. All right. But with that being said, that's a good lower time frame setup. Definitely. And I hope, again, I think that was a good example of that resistance, of telling that story or looking, okay, dude, how many times are you going to tap this wall and lose this floor? Look, I mean, 1, 2, 3. You open up, you're building on it. You open up, moving towards where sellers definitely controlled the prices. Sheesh. Mel, if you could give me an example of that, would be amazing. If I built a box and dropped down, what would be the play? If I built a box and dropped down, what would be the play? So if you built a box and you punch through that box, the play would be down. So the punchback theory works both ways. In a bull market, you might not get that great of a return because whatever target, and this is something, right, we have to kind of see cohesion across the big market, right? Across the ETFs, we want to see, okay, we're all moving back. At that point, you're going to see fluid movement in your direction, unless that stock has news or its sector by itself has received bad news, right? Now, typically those are things that we can see setup wise, but it is tougher to take downside trades in a bull market on most, future 500 companies, or top 500 companies and S&P and shit like that. But, and in the Qs, but, I mean, it's kind of like Neo. Neo is, we see the rest of China moving up, and Neo's already done that. So now it's like a little bit harder to short that thing. So, um, yeah, WXOT, you're good, brother. So would you just get out if? Oh, so if I was in the upside and we moved through the box underneath me, yes. Um, if it punched down through my box and I was short, then no. Um, I'll have to find. All right. Well, next time you come run into that situation, Mel, post your chart and we'll look over it. All right. Cool stuff. So far, so good. Yeah. All right. El Shivo with a 750%. Look at that. It's my son. A 750% um trade on, he only had, well, that could have been his runner on 1-3. Now I cannot see when he bought those, and that sucks. But let's see, what else does he have? Does anybody else have ARM? NVIDIA, Tesla, MSDR, MU. Nope, he was solo armed. So I don't want to assume too much, but we'll see if I can see why they took that trade. Here's the third. Okay, so that's the only thing I can theorize. So this is what I see. We're not going to spend too much time on this. Looks like he didn't even really feel super confident in it either. But you did have a box. You built at the floor. You lost your floor. You reclaimed it off of your wicks, punched back through the box. So, if we're looking at it technically, yes, he did a great job. And on the 24-hour, and this is what you were just talking about, it is empty space. And if you go look, wick to wick, you fill up all of it. All of those red candles. Now, again, I'm not a big fan of the wiki ones either, and I'm not so sure I would have taken this play either. But I guess if we're looking at, the facts here, as soon as you move it into lower time frame, it disintegrates, right, and becomes something else. But a punchback is a punchback, so there's no arguing with that. And it did recover a floor, which was right there at 130.40. So not something I think would be added to the watch list thing, so we don't need to screenshot that, but we might see a couple of those. All right. So okay, so Tesla calls coming in. I don't even need to fucking go through that one. Yeah, he just bounced off of a floor. That's basically the same. They looked at how we fell and the retest. That's the third. Yep, they sold them on the third. So they took that bounce off of the 50%, off of that 4-hour lower time frame bottom. Now again, I can go ahead and assume safely, because I can see when they bought these, that they bought them inside of this box, right? And so establishing where the top of that is, step one, and it's more of a range now. That's all right. We'll call it a box. I mean, I guess you got two here, but all right. So, I mean, this is straightforward day trading setups that we look for based on a higher time frame setup. You dumped really, really hard, really, really fast. You left really without any sort of retest, and that's what you just saw. I think that's a pretty straightforward play. Again, empty space, a box. Empty space, a box. So when I get asked to look at some fucking random pharmaceutical stock and you see me spaz out and I'm like, what the fuck? I see maybe these tiny pockets and a bunch of what ifs. And I get it, right? Sometimes biopharmaceuticals and, certain low volume stocks, I know, Cade, likes lower volume, but, even he's not all in biopharmaceuticals. So, when it stops making sense, I stop trying. I mean, it's just that simple. It's just like, oh, this don't work. I'm not looking at it, because the conclusion that I've come to, right, is that I'm going to make more money doing what I already know than trying to figure out how to trade some shit I don't. Do I need to be good at that? No. Do I want to? Nope. I could care less. If I catch a fucking biopharmaceutical stock once a decade, I'm happy. If it didn't happen at all, I get over it. I've only hit one this decade. Well, Sava, I guess, could be two, but that wasn't your typical biopharmaceutical bullshit. All right. Watch a ton of your vids. Haven't seen you go over how you choose what options to purchase. Is that in the workshop? It is. Yeah. Somewhere. And also, I mean, you go through my lives. I definitely say it somewhere. Now, I'm going to go ahead and assume as well that they probably were looking at this channel, and channel recoveries are a real thing. So just that alone, too, you did recover your channel. All right, let's keep it moving, guys. I want to bore you guys, but I want to try to find a lot of scalps happening on the 3rd. That's for damn sure. All right, let's see. So we got 1,000% on MU contracts. They bought that on the 3rd for the expiration of the 10th. Let's investigate. Hot damn. At it again. Same fucking setup. Same setup. Same everything. Now, this thing ended up going bananas, as we all know, with one of the largest punchbacks I've ever seen. Ever. Like box wise, large consolidation wise, just largest. I mean, it was a weekly box. That's what it was. Realistically, it was actually 2 weekly boxes stacked on top of each other. I think that's what you were just talking about, Mel. But reality is, this is where they took that play. And that is, wait, no, we took that play. That's right. I definitely slammed the shit out of that play. That's right. Empty space. It all's coming back to me. 4-hour time frame. 1, 2, 1, 2. Come on, buckle my shoe. This is where sellers should have stepped up. They didn't. You left empty space going down. You have lower time frame triggers that you could have used right here. Beautiful. Close at the end of the day where sellers previously controlled the price. All you have is this in front of you at 92.71. Price moves above that. You're now targeting the target here to your left through the empty space. Oh my God. And it rips ass. I see 1,300% on MU. He said, now runners are running. This fucking man's a genius. That's funny. Yeah, 1,300%, 1,400%, 1,700%, 1,600%, 1,200%. Absolutely diabolical. And what is the one thing that we're fucking looking for, guys? God damn it, I'm gonna lose my mind. I'm become violent. No, I'm sorry. Look at this. If you don't become profitable, dude, we're gonna exchange hands. Maybe that'll help. I'm not a fighter. I'm a lover. God damn, dude. This is just cakewalk. Oh, ooh. Retest. Reverse. Now you might ask me, what happened there, dude? I thought that was a punchback. It's not. That was the punchback. All the way down there. So this, I told you guys this many times before, right? When a box is punched through, all of the levels matter. The floor matters, the median matters, and the top matters, but none of them tell you anything other than if you break this, you get this. If you break that, then you get the rest. Now, if you took this trade and it wicked out into the 50% mark between the top here and the bottom here, that's not a bad day. Okay, so again, when you see these pullbacks and you're like, well, whoa, no, we would have already trimmed, you've already had money in your pocket, and you would have been dealing with runners, right? For the remainder of that empty space. I'm very, very, the last whole position I was holding that was huge like this was KSS, and you just had no time to trim. That was just wake up and freak the fuck out. Excuse my language. Recording ruined. So I think just looking back, on this one, and we'll go ahead and just repeat. This is another flawless, beautiful setup. Come here. Where'd you go? Is that it? Okay. Damn it. 4 hour. I feel like I'm lost here. Oh, yeah, I am lost here. I'm tripping balls. All right, here we go. What was the question? I think I just saw somebody in the trading chat. Was that somebody just said something about anchored VWAP? What was that about? Is there a certain percentage you trim on runners? On runners? No. There's, yeah, it's target based, brother. I could give a shit less about any of, like, the percentage is a byproduct of the play that I've identified on the chart. Stick to the chart. Do I sit and watch these trades or set alerts? I set alerts all over everything. In fact, this week, if you go look yourself, all of these moved. ARM, TTD, which dumped, but I wasn't long because I was still waiting. PLTR, that one moved up. Marvel, that one moved up. We had the ARM, TTD, PLTR, Marvel. I ripped my watch list in half. I don't know where the other half is. Mara's on there. You know, obviously, Mara's on that watch list. Shit, I got AOK back on that watch list. But all of these look the exact same. And, you know, starting this week, you know, I don't babysit. That's fear, Amelia. Am I saying that right? Amelia? That is fear. Okay. That is fear. And that's okay. We're human, right? But if you're babysitting your trades, that is FOMO based, right? Amila. Okay. So point A to point B. You set alerts before the trigger goes off. Okay. You got to trust yourself. And if you can acknowledge that you're inside of what I and dozens of other people regard as, like, this is the spot. We are doing what nobody else is doing. This is, we are an anomaly. This strategy does work. Just being able to go back, walk you guys through this, it is everything I teach, everything we repeat. It's just different problems that have to be solved with the same tools. They might look a little different, but the concept is the same. And so if you sit and you watch these things play out and it's still fear, right? You don't trust it. So keep watching and you're going to learn, right? There's going to be a point where you're like, all right, I can't ignore this anymore. That works. And your brain just isn't ready to, it might not be, you need more evidence, and that's okay too. So feed your brain more evidence. And this is, I think, if anything, probably quite a bit to feed your brain. So, ruminate on this after we get done. Go over these charts. Go look for the same setups that I'm showing you now and see if they go and they play out. Okay? And if they do, then you're on to something. And it's worth trusting because life's too short, to not take advantage of opportunities, especially if they're low risk, high reward. So, all right. Let's go back over here. There we go. Replay. Okay. So, Ivy, if you will screenshot this. Perfect. Oh, no, hold on. There you go. Oh, wait, do it. Don't do it. All right, there you go. Sorry. Yeah, we're going to be here for days. It's been an hour. We're at January 3rd. Well, guess what? We got lessons for the rest of the month. How about that? This is good shit. I love this. This is. I mean, just reflecting. I mean, I feel motivated. Do you know what I mean? Like, I feel like I trust this shit somehow even more. If this was a hug, I'd be inside. We would have fused together. Don't clip that. You can't clip that. Huh? Wait, no. Ivy can. You're fired. No, sorry. Um, Massive job security. It's all right. Let's see here. Okay, looks like everybody damn near caught that MU trade, Uber trade, QQQ. All right, now we're on the 6th. If that makes you feel any better. SPY $600 calls for 1,100%. I don't know. 450% on Uber, same play, right? We did see that go and continue to the upside. So clearly we did have people. Okay, so yeah, we can confirm now that multiple people bought longer expiration contracts. Some of the same people who took the shorter expiration contracts for the whole trade. So they did identify that trade and they did take it all the way. That's big. That was by OJ Simpson. He's no longer here, but I got scared. I'm gonna be honest with you. All right, let's see here. NVIDIA. So I'm kind of skipping over the 80 or the 100%ers. Like, I know it's shaded of me. Oh, somebody had an MU runner for 1,600%. Oh, never mind. For 2,900%. They bought them for $16. On this play that you're looking at right now, they bought them for $16 and sold them for $455. That is insane. That's 2 packs of cigarettes, or 1 pack of cigarette if you're in New York. And then a car payment in return. Yep. Gerald with the same thing, MU fat. Damn, that play lasted a good bit. Oh man, that was when White Light made $41,718 that day. It was pretty wild. So Uber and MU, definitely the ones. All right, let's see here. 200% on target. I don't know. Let's see. Anybody else get that one? Oh yeah, they did. Okay, so let's go look at target. And this is on the 7th. How do I rewind? Oh, there we go. Man, got to be smarter. All right, let's look at target. Let's see if we can find where they took that play. Oh my God, might be cooked. Nope. Hold on. What was that play? That was a target call 145 for January 10th. It is right here, January 3rd. Okay, I don't know when you bought this contract. Let's see if I can find that. You bought them on the 2nd? Or the okay, no, that is not the purchase date. Okay. Ah, there we go. Oh, they bought those 145 calls. Jesus Lord, brother. You bought 185 contracts at an $18 cost basis. And yeah, you bought on the 31st of. Wait, why is the expiry? Oh, 110. Okay. Hmm. Okay. So I can't hate it. It's not, I don't, I think I did take that one. Now, the one thing that we can just go ahead and say straightforward that this did have empty space and it had gone and recovered its floor. Now, when it did that, it exploded up and hit that same resistance, or yeah, right around that same resistance that we had hit before. Same wick right there. But the 4-hour, I think, tells this story a little bit better in terms of what these people were looking for. So let's look at that. All right. So here's what I suspect looking at this setup that this individual or these individuals we're looking at accomplishing. They saw a channel here to the downside, lower time frame, and they also saw a channel here on the upside. That would lead me to believe that they were looking for a push or punch back through this box that had already been wicked off of. And because they were spending all of this time consolidating on this floor, that would mean that over this top, we would be looking for a 130.75 target or floor. Cost basis. Build. Hold. Punch back. Fail to hold. Pull back. Touch the box that you built on the floor. And keep pushing. Now, if you had taken this trade and it did explode like that, you would have been able to say, well, if I get a candle close 4 hour below 130.26, it would drop me down here. But because it did a good job of turning that floor into cost basis, bounce, punch back, you don't have enough volume to hold that punch back, you come back. You still don't have a whole lot of volume, but you do get this nasty wick here. Well, you could have taken, is that 8 a.m. to 12 p.m.? So yeah, there was actually, that was the open. So it looks like on, yeah, it looks like on these highs off of that entry, which again, they bought. Oh, no shit. So he bought here. Sorry, my mistake. He bought here at 131, anticipating just the punchback. Now, I will say, just a little bit of a lackluster play, but we can look left and find solace in the fact that this floor, that floor in particular, has been a resistance, floor, and recovery point for target for quite some time. And inside of empty space like this, we have to use things like that when it's that much empty space. But that's not a screenshotable play. I'm gonna be honest with you. Good percentage. Can't argue with that. But as far as well, let me just say this: if would I take this with a like full position? No. I if I'm not mistaken, I did play target at the beginning of the year, but I'm not sure it was here, and I'm pretty sure it didn't work out. All right, let's see. Target.
Chef,
Yeah, I see. Oh my God.
hey,
Yeah,
have you seen my DM?
I am. What
Maybe
is
it's gonna be much more easier for me to send you the huge gains that I posted on the website. What do you think?
to go through those?
Yeah?
Yeah, I mean, I can use those. Are they date correlated though? Yeah, so the only issue with that is I want to be able to start from the beginning of the year and work my way down.
Oh,
I'm
I
just, yeah,
see,
you're
I
fine.
see.
I know I'm going to have to siphon through some day trades and stuff like that, which I'm doing right now as we speak. But yeah, the cool thing, I mean, I appreciate that. That if I didn't have that, January top down, then I would definitely do that. So I appreciate it though. Let's see. Damn. Give me a second, guys. Hold on. September 12th. What? That's crazy. Okay, sorry. Alrighty. Anyway, let's keep moving here. So target, that's mid. So win for the day. Rivian, Unity, Google. Yeah, I would need the date for when they took those two. So it's like, damn, we were fucking IWM up. So Mara put bought on the 6th, sold on the 10th, or for the 10th. 480 gain. That looks like a short. We'll take a look at it. Okay. Third. No, that's a lower time frame play. I'm trying to get away from those. All right, let's keep going. Again, just focusing on bigger plays. You guys are going to have to work through this with me. Oh my God. Okay, there we go. So on the 10th, he posted a target. So I'm going to go ahead and assume target kept going. Maintained. How the hell did you pull that off? Okay. You played, okay, another shorter expiration contract. Too many scalps. So many scalps. Ah, there we go. Okay, perfect. And this person said, Potter, you make me cream myself. Okay. Aha. Yeah, I remember this. You guys remember this? There we go. Now we're cooking with Crisco. Yeah, do you guys, yeah, I don't know if you guys remember this trade. All right, let's take a look at this and let's select a new bar here. Play out a little more. Perfect. I remember watching this on TikTok before joining. Yeah, this was juicy. All right, so now this is going to be an interesting one, right? Because there's a little bit of a different look here. And I will say, right, this is where the weekly had a bigger impact than the 24-hour. We stayed in this range, right? We had multiple rejections up at the top. We look at the 24-hour, you see that. Here, was it down there? Let's look at the 4-hour. Yep, there it is. So this is a range, right? Basically 2 boxes, because if you were to take this, box that up, you'll see cost basis does its work too. All right, so let's discuss how this play works out and why we took this, okay? Yeah, and that was, I think, if I'm not mistaken, we played that fucker. Yeah, we did. All right, so first of all, if you looked at the 24-hour time frame, again, I'd like to repeat, there was a gap up there, a wall, you went up, you filled it, you stopped, you left empty space behind, which is not good if you're going to stop, right? If you're going to hit the gas pedal, you got to have road in front of you. If you don't, you're going to crash. So with that being said, you pull back on every single level that you should have held. This one, you bounce, you gap down, you flush. Next level, same thing. You push down, you bounce, right? You hold for a couple days. What do buyers not do? Look at the wicks. Hold on one second. Behavior right there. Dog breaking in. All right. Manny did play this. Yeah. Yeah. Manny played this with me. All right. So now it's just really easy for me to tell you that the 3 rejections off of the top and the 50% of that range being broken and the box down on the 4-hour being broken gives you empty space down to the 838, which is the first red candle, right? On the 24-hour time frame, and the only candles that we see that have any structure or any sideways price action. Now, this is what's more important, right? Because that is the most straightforward explanation. But again, what do buyers need to do, right? What do buyers need to do in order to make it back up? Floors need to be recovered, and pushes off of things like cost basis should give a big response, right? Now, methodically, you pull back. Every time you hit a level, you fill up or retest, and you bang back down. Fill it up, retest, bang back down. On every opportunity where buyers have stepped up or there was any upwards price action, it was shorted. So as we're watching this play and we're seeing, okay, attention to detail here, how many times did I hit that floor? 3 times. Normally on something like Netflix, 2 times will do it. Volatility, that'll do it. You bounce 3 times. Every single time you fail. Now we could go down here and I bet you I could walk you, juicy couture. I could walk you down through this. So one thing that I want to establish here, you left no empty space in the most recent price action behind. Every pop, every bit of empty space is filled up, right? So what this tells me is that on every opportunity where buyers had a chance to reverse this trade, they did not. And some of their more pivotal levels, like the median of that range or the bottom of that cost basis. So what do we see towards the end of the day? A third rejection over the top and a close on the floor. What is in between me and my play and every single thing that we do? Empty space. You're going to get tired of me saying it. And we target the first structure. We trade box to box. Now, this was not your traditional box, but I do want to show you something. This is why we leave runners and why we look for empty space. Take a look at that. When I tell you this is why, I get in, I get out, and I just wait. Can more opportunities present themselves? Yes. Do some people like to bounce shit? Cool. Yes. If it makes sense on a higher time frame, like TTD, wouldn't mind bouncing that, right? But what would I have to do in order to adjust? Longer expiration. Longer expiration. Because I can't buy the bounce, have it do this, have it do that, have it do all of this shit, and then go. With a weekly, I'm going to get tore up. And then by the time it gets up there, you're probably cooked anyway. So this was basically a punch through that 873 or the median price of 882, 883, down through the empty space underneath it. And if I'm not mistaken, you can, or we should be able to go to the gains page and see the calls. No cap, Thailand on me. Michael said that in July. Or he said, or Manila, my motherland. Yep, so that was a pretty 400% trade. That's fucking hilarious. All right, so excuse me. Ivy, if you want to select that one, empty space. And again, there's a excuse me, an attachment or this video that people can go through, or you can go through if you forget.
Done, chef.
Perfect. All right. All right, so it looks like we also have a CVX call following this right around the same time frame, our CVS, for about 816%. So let's see what that's about. You guys see, you guys are picking up what I'm putting down. I don't even have to speak. These, and I mean, the more that we go through this, you're gonna be like, here he goes again. Same shit. This is not convincing you to focus on the higher time frame setups with empty space and consolidation. I don't know what else will. This should be a turning point for a lot of you guys. Seriously. Let's take a look. So on a 24-hour time frame, CVX falls fast. For what reason? I don't know. But it falls fast. Loses its floor and goes on a dump tirade to 42, right? That was your weekly floor. And not to mention a weekly box, right? It's a little bit cleaner on the weekly. Like so. Come on. You see what I'm saying? Come on. That's a level. That's a level to bounce off, right? Now, go back to the 24-hour. Fuck it. Go to the 4-hour, right? Now, hold on. Top-down analysis. All right, so let's get this squared away. Points of contact. See the wick? See the candle close? Yahtzee, right? There you go. Now, you take off really fast. You pop up. and we'll find this on the 4 hour, you find yourself with not enough volume to hold. So what do you need to do? What do you do when you climb a mountain and you didn't bring enough snacks, little snackies, or oxygen? You probably should go back to camp. You go back to camp, look at the first red candle to your left. Delicious, right? You fill up that big red candle or big green candle, and then you pull yourself up. Now, this is pre-market as well, but this sets you up for, again, the same opportunity. Empty space above, first green candle. Now, I do see 2 wicks off of the same target. So I would, and anytime I see that, I'm going to give that the floor. But the simple thing here, right, is we've got, it's kind of hard to count how many, but we could say 1, 2 at least, 1, 2, and that third one. So right here, right here, right here, right here. Box comes to a close. You get your candle close outside of it. You get 3 24-hour candles. And listen, got to have patience. Sometimes you got to make a plan to re-enter. Doesn't change the outcome of that potential empty space above you. So sometimes I take a trade and it does not work. And I've learned to reset myself and look for where, okay, well, that didn't work. Where do I need to get in? Now, moving down to the 4 hour, right? Now we can see this in a little bit better detail. What stopped us? Same shit that stopped us before, right? That, this, those wicks, prices pushing off of those. Now the control to me is right here. The control below us is off the first red candles that I see, and that's here. Y'all see this? The 4 hour, exactly, Philo. Says enough. Says enough. You gave him a little chance. Pull back up. That candle right there. That candle right there. 4 a.m. closes right at 45.11 against the wicks, in the wicks. Wicks are just showing you where price has been rejected off of, not controlled. This is why. Look at where the retest happens. Same place. Not the wicks. Same place. Candle control. Higher time frame. Right? This is why when you get down into the lower time frame, now that's a box, right? Just a straight up box. Beautiful box. And a punchback. Beautiful punchback. Oh my God. I sound like Trump right now. Look at this. Look at it. It's so good and tasty. Directly, I mean, and not to mention, look, you get your floor. Oh my God, dude, my knees are about to buckle. Folks, look how you respond. How you respond. First green candle to your left. We don't see much resistance till we get there. Then when you get a candle up above it, look how it responds. Right through that empty space. Fills it up, closes back underneath it, right? And you can see sellers are trying to keep you down. Trying. This is ridiculous, guys. Y'all the only people on planet Earth right now that are seeing this shit right this. I really do love this. I like taking, you know, yeah, it's so hard to describe, man. And maybe this is autism, and I'm in it right now. And I don't realize I'm sweating. I'm sweating right now. No cap. Why? I don't know. It's my 3rd shirt today, but it's like, I don't need to make anything up. It's all on the chart, everything. And the more that I see it, the less I care about what anybody else has to say. All of the indicators come from the chart, from something they're trying to derive from the chart. All of them. So I'm going to look at the chart. Oh, get that out of here, birds. That's going to be in the damn recording, you freak. Oh, my God. Jesus Christ. So anyway, can I get a thumbs up in the chat? Does everybody make sense? Yeah, I'm sorry. That was wild. So your entry would be the 2 hour candle close around 43.12. There is so like I said, yeah, it is Leo. Perfect. But there's multiple entries here. Multiple. You could have taken a 2-hour candle close at 45.13. You could have taken the push up above on a lower time frame above 44.71. Now this was at that's at 12 p.m. You could have taken the bounce. You could have taken the reclamation of the floor. We don't use that word enough. Reclamation. So that everybody and again, put yourself in the seller's shoes. They're usually tiny shoes, but if you squeeze in hard enough, you'll get in there. Little bears. But that sucks for them. Short, fail. Okay, let's try and bring this back down. Short, cannot. Give them what they want and then just blow their pants off. This is where the volume's at. That's where the juice is. That's why I wait for confirmation, man. I don't try to be, it's not, dude, you could be right. I'm trying to make money. Like, I'm not trying, that's not the first thing that I want. Like being right, making money kind of go hand in hand, but I'm not trying to make that happen until like TTD, like I said, I'll take that little bounce, but until I see what I need to see, because how many more times do you need to see this play out before you're convinced that it's worth waiting and not stressing out about? You'll get the entry. Everybody else does. You'll get it too. All right, so to go ahead and finish this up, which great trade by whomever was involved. And do you see how price moved? Do you guys see this? Look. Oh. When I die, I hope I see a chart and it looks like this one. So beautiful. Beautiful. This is everything. Empty space, range, right? I mean, even if you went and split this range dead in half, that's the first red candle right there. Everything is mechanical and it's all on your chart. And if it doesn't make sense, don't waste your time with it. If a girl and you go to dinner and she says, will you pay for the dinner and my phone bill? Make a good decision. If it doesn't make sense, how'd that get included in the bill? It happened to me when I was 19. First time I met that chick too. Oh yeah. Wasn't Peyton. That's when I knew. Not making a good decision. I'm still gonna go forward with it because I'm being an idiot. Told her I could pay it the next day. All right. I have a story to tell you guys after this about I had a real bathroom exit. Like a real have to jump out the second story window. I'm just watching how this price is interacting, folks. This is also really, really, look at this. Do you guys just watch that with me? So you run into your first areas of resistance, the only place where we have any, right? These weekly, look at these floors. So drop this down, first floor, candle close. That's where you fight. 1, 2, 2, and you build. But look what happens when you get the floor. You fill up the rest of that empty space. So, real quick, zero cool. Yeah, you're right. But if you see a play that has multiple areas of empty space, you can plan to take them all or to try to capture them all by adjusting the expiration per resistance. 1, I would say that's probably 2. So this is and let's see, this took from January 10th to January, I guess it hits the high at 17th. So 2-week contracts, which is what it's so easy when watching you. Got to build my confidence. Start posting your charts more in the morning. When you do your request, folks, stop posting just your request, post your chart. If I see something abhorrent on your chart, I'm going to say something. I can't help it. If I see a box that doesn't make any sense, if I don't say anything about it, then you probably are good. I look past things, and if they don't have any problems, I'm like, okay. So, but post your chart more. We'll get you there. I mean, seriously, it's inevitable. But reps, keep charting. Keep going through this, but let's keep going. And yeah, you guys are probably right. We're going to be doing this now for probably going to take us to the damn end of September to get this shit done. So I am sorry for that. Oh, you're fine, man. If anybody knows me, they know that I actually enjoy a good derail. I'm like a train insurance company. Love it. Wait, no, I hate it. I'm an insurance company. Shut up, Stelio. Hey, get this guy out of here. Bro, I hate you sometimes, dude. What the fuck? Dude, he's so mean. He's so mean. Did you get a screenshot of that one, Ivy?
The previous time frame? Yes, chef.
Okay. You could take this one too if you want. We have fun. You know, you're
Done.
learning a lot of stuff in here, but you laugh too. So what's up, Ivy? You got it? Okay, cool. Perfect.
Yeah,
All
I
right.
got it. But on Netflix, I wasn't able to get the 24 hours. Is that okay?
Let's go ahead and do that now. Damn, look at that squeeze. Look at the rip. Oh my God. No, that's not what I meant to do. Go. Yeah, screenshot that bad boy. You know what, Ivy? Before we go any
Yeah, chef.
further, I'm going to start posting these. Hold on one second. Where the fuck do you go? You'd think I'd know exactly where this shit is after all of my time on here, but I still have. There it is. Okay, let's do this. Just so everybody kind of see what we were looking for. Okay. There, screenshot that. I'll go back. There's only like 3 other charts or some shit like that. So we'll...
Got it, chef.
Perfect. All right. So that was 800% play on CVX. Good play on Netflix there. I know Chef Potter for years now. Nothing amazes me more than aw. Turtle Soup Trader. Hold on. AMD, how much was those? That was only 114%. That's only 114%. Jaded. Oh my God. Diddy held that. Yeah, he made 6,600% on that CVX trade. Sorry, I'm wrong. 8,200%. My bad. So big trade. Good setup. All right, looks like on 114, our friends, and I cannot see the buy date on that one. So I'll skip that one. That wasn't that big of a trade. I mean, it's only 400, or it was 400%, which is good, but HD 600%, 405 calls purchased on 113, expiration 117. Let's see what he was doing. So they were bought on the 13th. Okay. Oh, damn, buddy. I love that. Fuck yeah. Again, same shit. Beautiful. So let's go ahead. And again, we're a couple days before he purchased. So he says that says the 13th. Looks like, where'd you go, you little sucker? Bought on the bought 113, expiration 117. Target 405. He spent $60 per contract. Heck, I love my job. There it is. So let me ask everybody a question before I break this down. How many of you, without me even saying a word, get it? You just get it. Does that make, how many of you, just give me an emoji, anything, perfect sense type shit? Philo, get out of here, dude. John, dude. Oh my God. All right. I should have been specific with the emoji. Chart good, emotion bad. There you go. This makes sense is what to do when things don't go right because that causes the fear and the confusion. Sure. We make a plan. What's above, what's below. We go down to the lower time frame. I'm going to go ahead and again assume that he bought this probably towards the end of the day. It looks that way. Let's see here, 14th. Okay, I can actually see why he did this. So there was a lower time. Nope, that was a box that had already been punched through. This is attention to detail. Don't be scared to tell a quick story. 182.50, you pop down off of a punch back. That left behind this box. See, this is where I know that a lot of you guys are like, whoa, dude, how the fuck do you even see that? Got to turn that autism up. No, just kidding. But seriously, this is something that is trained. All right. It's just charting and repetition. The more you look for it, the easier it is to see. But when I look at this setup, again, and you're also drawn to it for a reason. If you need to find a stop loss, you're going to find one. So with that being said, are you serious? Oh my God, I've had the buttons on my shirt like kind of lowly unbuttoned, and I forgot had my camera on. Oh, never mind, it's kind of cut off. Okay, we're good. Oh, dude, yeah, I thought I was like, it's down on my belly button, bro. It's like, oh no. Okay, so Nick, you're too new to be saying it. Get out of here. All right, so let's go ahead and wrap this up. You bounced off the floor. Now that right there, that is the 8th. You punched up. Overnight, you hit that cost basis above, right? You didn't quite respond the way that we would have wanted to, and you did come back down and you did fill your gap. But what did you hold? And this is where I actually can see why he did this. You held that. That's important. And you did end up closing right back up against that wall, right? You ended up pushing back up above it. So there was no reason for him to, well, if he bought it then clearly he was going to use that as a stop loss. Now that is a little bit riskier and there probably was a little bit of a safer entry, but if you can find a stop loss, you can do anything. That being said, that same place that you reject multiple times, again, every single one of these charts is saying the same thing. Sellers, 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 losers. You turn these sellers into losers. And that's what you're seeing by that expansion in price looking that way. So is this a great setup? 100%. Does it fill up all of its empty space to the first green candle on its left? 100%. Are you watching the time for candles close up against your stop? Are you watching the time for candle close? Yeah. Here's what I'm also going to say, Brad. I don't want to put myself in situations where the 5-minute is I have to be sometimes, right? Some charts call for it. But if even going through this, you know what I mean? Like a 4-hour candle close at the end, or, oh, never mind, that's at 4 a.m. Fuck, never mind. So that candle actually, this all happens in after hours. So what is it? This candle? Yeah, that's a 4 p.m. candle close, only green candle close after you just experienced that rejection. Bam, bam, bam. This is where all of you guys, like it's 1 o'clock in the afternoon, you're all talking. That's what you should be trying to map out together. That's what teamwork inside of this Discord could really be. Focus on mapping out that story. How'd you get here? What's that consolidation saying to me? Right? Because that's where it gets a little harder. And of course, you would want to, well, let's zoom back out here. 24-hour candle. Look, that's it. That's it. Right there. Candle refused. How many times? Right? And what would you do if price closed right up against your stop loss at the end of the day? That's the result. So HD, or rather, sorry, the lower time frame is used to, and in this case, we're looking at it because he entered clearly off of this bounce, right? Looking in towards the end of the day, looking for this to go and break over and pop over that top. And that being said, there's nothing but empty space up above you. So is it a big deal that the bottom of the green 24-hour candle closes above bottom of previous red candle? Oh, so wait, are you saying like if there's a red? Yeah, no, I don't. I look towards the green candle. Like, so let's say this red candle was like here, sure, but I would rather, yeah, look at the green candle. So look at it this way: a green candle, gapping, that would be a gap up. If the red candle is below the green candle, that's a gap up. That means that buyers or price moved up overnight to an area that buyers could hold. That's going to be where buyers take it. They're going to take it. It's like the Oregon Trail. You're just trying to, I mean, I guess that's maybe not the best metaphor, but like you're trying to take those, take that price to somebody else who would want it. You're making this journey to bring it there, and price is not accepted, or price sits and consolidates. That's a lot of times where failures can happen. But yes, that is where at the bottom of that range, or the bottom of the candle, green candle, ignoring that red one that goes past it. So, all right. Sometimes the chart pushes all night and reverses at the entry point and the open. This happens to you. Yeah, I heard you talking about that. I'd like to, if you ever have some time and you want to DM me, kind of like if you have any of your recap trades, I would be happy to look over some of the trades that you've taken, and I'll shoot you a quick DM back. And I think that would give me a little bit better insight. But that is something that happens. I mean, I'm not the only. I've had this happen to me. You guys have seen this shit happen to me. I've had earnings plays go and hit my target and then pull back and never go again. These are, again, situations where, and I answered this now because I don't have a lot of, I don't have a lot of examples or anything to go over right now. But like, I stick with the mantra: it either works or it doesn't. So if it goes up, it hits my target and it pulls back to where I got in or where I have to stop out, then the tough pill gets bigger, but you still got to swallow it. The play's over. And that does happen. Shut up, Steely. It does happen. Oh, come on, guys. Jesus Christ. But it is what it is. And I wish I could give you, a Hallmark card and some flowers when that happens. But the reality is, out of the times that it doesn't happen, right? And it could be the chart. That's why I want to see what you took. Because typically, I see people, and it could be a smaller range, it could be a different kind of stock. So if I can see what you're trading, what you're doing, what you're looking for, then I could give you a better insight on if you're taking trades inside of the box, that would be acceptable. So what's the loss that we should consider acceptable? 1 to 2%? I don't base my trades on that, Kilroy. So first of all, part of the risk management is not using a lot of it at all, because I know that I don't have to. I could use a fraction of what most people use just to day trade and make twice as much money. So that's a huge factor. But and if you look at TTI, who trades contracts similar to me, in a way, their stop loss is just not giving a fuck. I mean, and they literally, because of the risk reward, and if you look at their P&Ls, you look over it over a year. If you don't know who that is, that's the Trading Initiative. He's the only other person that, but yeah, obviously Put Brothers, but he's kind of like the homie, But TTI is like, you could almost say borderline, I wouldn't say trading mentor, but business mentor, perhaps. Him and J Town. Oh, dude, they go at it. That'd be amazing. Oh, I paid money to see that. But anyway, he is one of the only people that I sign off on. He is strictly a day trader, to the point where if you join his Discord, he doesn't want to. You better hide the day trades, because if you pay him a service, his intention is to make you profitable. That's what you paid for. That's what he's going to give you. And a lot of people don't like that, but that is the reality, right? Is if you want to be profitable, he's going to take you there. But you look at their P&Ls over a year, and you're going to see some like, oh, damn, that was kind of a big dip. I mean, honestly, I can't commend him and the people inside of that Discord enough. They really do not give a fuck, because they know what they're doing works. That's the trust. They trust the system so much that they could have 5 or 6 plays that don't work out in a row. Now, first of all, they all have over $10,000 accounts because you can't even join unless you have that. I've thought about doing that, but I just can't do it. Feel terrible. Uh, but I told him, I was like, dude, I feel like everybody with my system has a chance. So for me to just be like, you need a $10,000 account, but he's looking for people who are like business owners. So it makes sense. But that being said, um, as far as like, stop losses are concerned, percentage wise, I don't really base that too much. Typically my entry is my exit. Now, let's say I had taken HD yesterday or, here. And I'm in it for the long haul. I want the rest all the way up to 415. If I can know, right? If I can know that we're going to fall to go to where I took that trade, right? Assuming that there's empty space in between me and that entry, then I'll just get out there, right? So if I saw like something like that at 401 get lost, and I know that would drop us down into 399 where I took that trade, I'm gonna get out. And you know what I'm gonna do? I'm gonna set up a play and that's something that once you start doing that, it starts to really make sense. Like, okay, why put myself through the pain of, wondering when I know that it's going to fall, don't know if it's going to bounce. I can take that bounce trade. And some people will hold it and be like, well, look, if it doesn't have the expiration to hold, then you shouldn't. If you do, then fine. But if you don't, so like, yeah, if I had an expiration that was, and this was in January, if it was out till April, then okay, a pullback would be acceptable. If I'm playing weeklies looking for, or next week's contracts, and I know this is going to take me down to 399, I'm out. So to answer this question, I don't base my stop losses off of a certain percentage because that technically has nothing to do with the chart. I've entered trades, put $600 or $800 into a trade, and it's been down 25%. Like I've taken trades and they open up and I'm like, oh, whew, shit, damn, I'm down 40% right now. Now, let me also just remind you, I am only so let me actually give you a statistic. This is something that me and TTI share. I could lose 60% of my trades and still be profitable. The risk that I put on the table, I got a machine gun. I could keep laying down that risk. I could keep throwing, obviously at some point we're being absurd, but we know that A, we're working with a great system. We know that B, this is low risk, high reward. And so when you figure out what your risk is, and you adhere to that, then, and again, you don't have to, like, it's not the same as normal people. You can, use a smaller amount of your risk. And that is technically part of the stop loss. Like you're just going to lose less, but and I think one thing I had a student tell me that, he was like, well, if I put in more, I'll make more. And I'm like, yeah, we're looking for sustainability here, not a fucking knockout. Right? If we're wrong, which it happens, and we can accept that, that's always going to happen. We will lose. We're going to lose next week, maybe next month. It's going to happen. Twilio was a loss for me. It was a loss. I lost, I think like $439 or some shit like that. But ARM. So, it's like, you could take 3 trades, one of them takes off and does what you needed to do, and you're probably going to not be concerned as much with the other ones. I mean, and that's the type of setups that we're looking for here. Well, of course, not as much now. Ow, bastard. Sorry, my cat swiped at me. But I mean, yeah, if I feel like I made a stupid mistake, K-sit guy, yeah. If I feel like, in fact, there was a trade, I did it right in front of everybody. I took a short trade on the Qs a couple weeks ago. Where was this? I remember where that was. I believe it was right there. I can't remember where this was, but it was somewhere in here. I tried to take something short, and I failed to look at a 24. I almost think it was here off that first drop. if I'm not mistaken. It's I can't remember. It's a small lower time frame trade, but that one didn't work. And it was because I didn't zoom out enough. If you ever meet somebody who claims to be a guru and they don't make mistakes, I mean, then they're probably fucking full of shit. I still, to this day, am making mistakes, you know, dumb ones that I'm like, fuck, man, dude, you literally teach this shit. What the fuck are you doing? But I'm a human, right? Sometimes I move too fast. Sometimes that day I'm amped up, or maybe I have too much going on. It was that 1 hour bounce level. That's right. Yeah. I took that trade, didn't work out. All right, well, it started to work out and then it didn't. And I believe, if I'm not mistaken either, it reversed, went the other way. Yeah, it did. It reversed and went the other way. That's right. And we ended up catching it to the upside. So, you know, yeah, of course. So then do you suggest set alerts and look at it if it's hitting a box or dropping through boxes? Yeah. So I especially, so once the trade takes off, will you stop it? Once the trade takes off and I'm in empty space, like with ARM or with it, that's where, yeah, as we near resistances, I look at what's above and what's below and I set alerts. And I've learned that your attentiveness doesn't, like, as long as you have everything mapped out and alerts are set, your attentiveness doesn't, like, I walk away from the charts all the time. I'll be outside with the chickens. I'll be outside working in the garden, hanging out with Peyton, fucking cleaning the garage, got my headphones in, walking past my screen, my office, you know, maybe every 5 or 6 minutes, 10 minutes, or sometimes I go and I fucking take a nap and I have the charts up on the TV and I got my alert set on loud and I'm chilling. I've learned that I've learned this through, like, I used to sit and fucking like stare at the charts. Every candle matters. And then I learned, damn, I just sat there and watched it, did exactly what I thought I was going to do. And do I trust my system or not? Do I really need to babysit this shit, or do I trust my system or not that every single example that we've gone through tonight, every single play that we've gone through so far tonight has been a replication and has shown you what price does through empty space, what price does coming out of an area of consolidation with 1, 2, 3 above and below. So Amelia, that is I guess kind of a iffy. I'd say about 4 years, but the reality is when I first stepped, well, not first. I would say within, after I left the first group, I caught onto this idea pretty early along, like the whole box thing. Now, the thing that fucked me up is I didn't know about the 24-hour yet, and that delayed my journey. But I was able to still see enough that that's when I started flipping the accounts, is when I was swing trading through these. Now, I still had indicators on my chart. I was still mapping out volume profile. So, you know, you could say that the concepts began, but I didn't because who the fuck am I is what I struggled with mentally. I mean, I can't tell you how much that, like, who the fuck are you to come into a market, to step into the market that's existed for 2, 3, you know, I guess if you want to look back, you know, even further to Japanese candlesticks, this shit has existed for a long time. Who are you to step into the market and say you have something new? And that question hung over my head. Who am I? Why, who the fuck? But there's 2 things that changed it. I keep seeing this thing happen over and over and over again. And okay, volume profile is showing me that all of the volume is at the 50% mark of this box. I've never seen anybody tell me that. I mean, I know at that point, I didn't know if that was important information or not, but that's where all the volume is at. And every time it closes through it, it seems like it keeps going. Like, hey, okay, that's something to catch on to. And I was, you know, in theory, in combination with indicators, using that. But then I watched a little documentary that kind of changed my life a little bit. It was this trading. It was over in England, and here in New York City, obviously. And this guy was asking stockbrokers and traders that were on the floor, "What'd you do before this?" Construction worker, tax attendant, longshoreman, principal, teacher, plumber. My jaw dropped. I was like, "Excuse me? You're telling me that these are just regular ass fucking people?" I thought for some reason in my mind that this was just filled with brainiacs. Now I'm sure they're not stupid, but money is the motivator. And connections are the web that gets you in there. But if they are if they can do it and they own the shit, they're working with institutions, or they're working with large amounts of capital. It's different up there. That's a different thing. But then I also thought about, well, when everybody comes into the market, everybody needs or tries to learn from somebody else because they think they got it figured out. But there's not a lot of people who have figured it all out. So fuck them. And I gave it a name. No. That's funny. So, I mean, again, it was just kind of like okay, well, how many times do I need to see this before I just go ahead and call it what it is? Y'all didn't see it. I guess I'm calling it. And Darvis had the right idea, but he didn't finish the job. He didn't finish the job. He did. And mind you, Darvis was broke his whole life. There's actually a ton of dudes who made indicators who he was broke his whole life. He died broke. Selling an indicator. Calling out a crazy old man or a dead old man is crazy. Take that, scammer. I'm sorry. Serious about this shit. Real. This dude's beating the dead. Anyway, so, I will, Manny was Atlas and the gang, I'm bouncing this shit off of them. And then there was also this light bulb moment for me and Manny. Manny showed me his secret ABC charts. And he's like, "Bro." Hold on, that sounded Mexican. Let me try it again. I can't do it. I go straight. Anyway. Sorry, Manny. I love you, brother. He was showing me his magic ABC charts. I still forget what they're called. Sierra charts. And he saw the same shit. There it is. The magic charts, TPO. He was like, "Dude, we're doing the same shit. You're just doing the chart, and I'm doing magic numbers over here. Voodoo letters. It's the same shit." And so I'm like, "All right, dude, there's no more fucking around here. I'm winning. The shit works. It keeps happening. Fuck him." Potterbox. Then I kicked fucking Coin Clapper's ass out of my Discord. And no, I'm sorry. I'm sorry. He's basically dead. He's not even here to defend himself. Oh, whose fault is that? Yeah, who's next? All right. Yeah, definitely. All right. Plunger, no. Don't make me do it. I'll do it though. No, I'm kidding. All right. Okay, so it looks like we got a TZA put for 6,100%. But I don't think that he played that one very well. He only got 244% out of it. Is that day, I believe. So what the hell was that? Oh, $12 put, empty space down below. Obviously, you've already bounced off of the top of this thing many times. I'm not going to go through this one any further because I think it's pretty clear. Let's see, did it play out all the way? That's money. Box to box. So there you go. I mean, that is not something I think I would take, if I'm being honest with you. Would you like to know why? Stelio, would you like to explain to the class why I wouldn't take this trade? Come on up. He's also old and dead. Yeah. Well, if Stelio was still here. No, not no box. Come on, man. What is it?
Hello?
Hell, did you said like an old man? What's up? Yeah.
Why? Oh, the risk to reward.
There it is.
It's
Right?
poopy.
It's poopy.
Yes!
That's right. He's got it. Send that guy to the clink. All right. 1170. I'm just kidding. Get him out of here. We're still beefing, Stelio. Thanks for the good answer, though. All right. The price. 1171 to 1124. Sorry. Not doing it. Just not doing it. We're not doing that. That's what am I playing for? Shekels? Definitely not shekels. But pennies? Nope. I'm teaching you guys right now, and my cat is having a violent Lord of the Rings battle with my hand at the exact same time. Can you fucking let me go, dude? All right, I'm serious. Let me go. Damn, I couldn't get my hand out of his furry grasp. All right, let's keep going through the games page. Yeah, even the cats are catching hands, baby. I know I am amped up. You know, this shit does excite me. I mean, it's cool to see, but it's also, you know, I think this is just the perspective that a lot of you guys need to, you know, really go forward and be like, this is what I'm looking for. You know, no less, no more. Citigroup calls, bought on the 8th, sold on the 17th. Weekly? Okay. So bought on the 8th for $4. The 8th is right here. Okay, so he bought it on the off the basically when at the end of the day when you closed down at 69.71. Next day you bounce back up. We'll zoom that in a little bit. Now this is not a punchback, but it is a play into empty space, right? It is. Now I will say there is a punchback on a lower time frame, right? Punchback on the 2-hour was here. You pop through, make a new high. You don't have enough volume. You build a box to go punch back through later. So, oh no, I got stopped out because I took this trade right here. You're all right. Stop out here. You can get back up in there, or you could get back in here. Or you could take the bounce off of here because you opened up there to go fill your gap and you surpassed that top at 70.32 going into the empty space that you created previously, where you then would have the catalyst to take Citigroup through cost basis and look how it rides. Loss. All right. That is I mean, I will say, you know, that's a whole lot of empty space, but that's beautiful. And essentially, that was the empty space that they were looking to take advantage of. So now that's almost too wide to fucking screenshot. I'm sorry I say the F word so many times, guys. I'm really trying. No, I'm not. I'll try now. How far did you go on this thing? That's 50% right there. 50% of where you started and where you're going. You build a box. Building a box. Retesting. Hot damn. Well, good thing he sold. Beautiful. All right. Let's see here. Man, the thing's still going. Let's see. Now I'm just looking for 1,000%ers. Okay, that's a good ass trade. AVGO 240 calls, bought 115, sold or for the. Oh damn, that's gonna be a lower time frame trade. That was a 600% trade, and you bought that on the Oh, okay. Yeah, I guess that makes sense, right? And that was the 15th, 11th, 13th, 5th. Oh my God, and this person was chasing. Oh, well, it was a quick trade. So bought on the 15th. Wait, how the fuck do you buy that on the 15th? Wait a second. How the fuck did he buy that on one? Oh my God, I'm in December. You guys just let me go senile like this? That's crazy. Y'all just let me go see. You just let me senile out all by myself. Just in December. I'm in the wrong month. There we go. Now we're here. Where am I? Felt like I was channeling Biden there for a second, baby. Biden actions. I'm blind. I can't help you. All right. So it looks like, and again, that was on the 17th. All right. I'm not going to waste my time with this one. This is lower, two lower time frame for me to recap. Good trade, but I see why or where, but not my thing. I don't trade in boxes like that. So, all right. This one, check the setup before we go. I thought that was Baba for a second. Baba has a exact thing that looks just like that. All right, so that was 115. Okay, hell yeah. $300 call. $17th. Did that happen in pre-market? Yeah, that did. Okay, thank God. All right, so this is, I'd say, kind of mid, if I'm being honest with you. It is not, it was a $568 play. I can't argue with the fact that it did go up and tap this for the third time. Would this be a trade that I take as a big, this is a day trade / low risk potential swing trade overnight? But he did take this on the 15th. Okay, hold on. I am flat ass wrong. He took that off of the bounce. So let's go over that. That actually is a pretty fucking good play. So the reasoning, and I'm going to assume, again, he's looking at this off of the bounce, which it did recover. It did bounce. Part of the same wall. So if you look over here to your left, that's 261.50. You'll notice there's a box here now. That is your old resistance. So clearly, this is the 14th. That's the 15th. He took the punch back. He was aiming for the empty space. And so this is how an individual could potentially go and look at a box, right? When you're in the beginning, you don't always have to put in all that work because you don't have enough problem solving skills with the strategy to kind of be able to expand upon it. But this is lower time frame wise, beautiful. So a beautiful setup. I lost my train of thought there for a second. Sorry. That being said, you get a beautiful punchback through 262. What is above you, right? Nothing except for the open, which gives you a little bit of turbulence. Do you see it? First green candle to my left. And then you finish right through here into the empty space. The morning gives you a gap up. You punch through the box at 289.32 and you run up halfway. I mean, that was, hold on, let's see. That was a gap up. That was all day Tuesday and Friday. Okay, one can assume that this quick whip down happened pretty much at the bell. You left a ton of empty space, and then it finally goes and hits that 303 target. So yeah, I'd give this one a 6 out of 10. It's not a great play in terms of what we have seen now going through our setups. 24-hour setup, but I can't, obviously this person was able to take advantage of rules that don't change. Empty space, 1, 2, 3, it still ends up working out. So, all right, I'm gonna try to dig a little deeper so that way I'm not wasting my time on these. Oh shit. I think he's in here right now. I think AA Ron. You in here, AA Ron? I thought I could have sworn I seen his name. Welcome back. Where did he take it exactly? Yeah, this is your gain from January 17th. You took WBA calls. I remember this one. Why does that look weird? Wait. Oh. Wait, no, they have a new ticker now. What's their ticker again? That's not the right one. Are they delit? Help me out here, folks. I'm pretty sure something happened to them. Delisted. Fuck. That's right. It's private. Huh. Well, can't look at that one then. Well, good job. 866% on that. All right, let's see here. That's only 182%, only 176. It's only 244. He said, let them sit back and DoorDash. That's funny. All right. CVX. Bottom a third for the 24th expiration. Posted this screenshot on 117. Thank you guys for your patience, by the way. I know I didn't pre-plan any of this, just winging it here. So like I didn't have like a curriculum. Bad teacher. January. Okay. So what did you do on this one? A call. You bought it on the 3rd of January. Okay. So you were literally just taking, oh my God. Beautiful. I mean, beautiful. Y'all, again, probably one that so let's really quickly. I want you to tell me how you feel. This is like a therapist session. How do you feel looking at, second, where to go? How do you feel looking at coin? Oh, that doesn't have the replay on. So tell me the difference. And this is actually, I'm glad that we're here. This is why I turned down some of the plays that you guys enthusiastically bring up. Do you see why? I want this greedy little guy, and I just want a willy big bag of money. And this right here, it just adds too much uncertainty, right? It's just, yes, it worked out. Yes, if you took it down here, it obviously worked out, and that probably was a better play because of the distance than this one. I do like having great deals of price action or distance, and this compared to this, I'll choose this any day. It's just that simple. And I am, in all honesty, I'm aiming for the ones that I know are gonna rip. Why else are we here? For baby trades? For lemonade stands? I get, and don't get me started on base hit theory, like where people think they can just chip away with little gains at the market. No. This is how rich people get rich. And we have a rhyme and a reason. And when I see this and I'm like, well, there's a 50%, don't forget that, right? You see that little bit of empty space, but every bit of empty space has a 50% mark. Look how you respond. So all of a sudden, my risk is bleh. It just doesn't allow price to truly expand. And not to mention, there is something to let's talk about this. There is something to say about boxes. Where the fuck did we just go? Now I'm lost. Where am I? There we go. There is something to say about ranges. This is something I don't get an opportunity to talk about all the time. Tell me the differences between this and that. A lot of candles side by side, a lot of points of contact, less of a spread, less empty space. Let me take you on a journey to our friend MU. Want to know why that was such a bastard? Now, there was money to be made in there on a lower time frame, for sure. We did it. But that, as far as a bigger move, you're already exhausted when you get to the other side. You created empty space here, then you rip all the way back up, and then you left empty space behind, and then you go back down, and it's just it's a nightmare. Right? And as technicals go, right? Earnings are one of the few things that do throw a wrench in the fucking analysis sometimes. And this would be one of those areas where earnings pops you up. You do fill up the empty space in the most recent price action to you, but on the weekly, which is the highest time frame and has more say than the 24-hour, does not. So that ends up being again, I said this earlier, that's a multi-tiered box or two boxes sitting on top of one another, which is why when MU ended up coming back up, it once it got the first one, it was over with. You ripped all the way back up. Some people made a lot of money on that. All right. Potter will in fact be drawing boxes all over his retirement home. Hell yeah, I will. If I don't have a cybernetic body. All right. You guys getting tired? How are we doing? Everybody, pulse check. Wait, in MU, you have a box on a box. How do you decide that? What are the rules? Separation of price. So when I look at this one, 1, 2, 3, 1, 2, 1, 2, 1, 2, box. And what that does is create a huge catalyst. Because when you get a box that says we're going to make a new high, and then that new high is cost basis, you take the volume here, you take the volume there, and you do the hokey pokey, and you make a giant bag. Ooh. Again, weekly. This was a weekly box. Third time. Now price can work. Boom. Crazy. The weekly is the hardest, right? Because the 24-hour can, just like the 5-minute, can wick you out on a hourly or a 24-hour setup. So can the 24-hour, right? Which is why it's important that you have, if you find a 24-hour setup, it doesn't mean you always have a weekly one. You might not have a box. So it's like, if you don't see any turbulence or anything disagreeing, we are always doing top-down analysis. So you might be wondering, well, how would I have known that? Every single day, every single time, every single week, especially on Fridays and Sundays, we're looking at the higher weekly timeframes. Where do we need to close? And that does so weekly time frame is going to be longer plays, right? Literally longer plays. longer expiration place. Because if you were looking at this this MU area here, and you wanted to, you were like, okay, well, holy shit, we just went and reclaimed those floors. I think I want to try to take it for, you know, whatever next, you know, couple months out, or, you know, 6 months out. I want to take this one all the way to 128. A weekly box is going to require that you have a good expiration. It's borderline damn near an investment. So, all right. You tired? What? My portfolio has been in a box for 6 months. I need to stop and relearn everything. Listen, everybody. I have to take breaks, and it's because my mind gets so clouded with all the things that just happen, and not because there's just I have too much information to offer, but it's just like doing anything. You get a little bit burnt out, your brain starts to get a little tired, and this is the system to where you could absolutely say less is more. Less is more. Nah, dude, that I don't see a black screen. That looks great. Is there a place I can go to learn how to make boxes? That's the workshop. So if you haven't taken the workshop, then that would be the next place to go. Damn. All right. It's back. Everybody good? We're wired? All right, cool. I might give everybody here a little intermission after this next chart. Let you guys go potty. Actually, let me go potty, because I don't want to know if you're, but I know people just be taking their phone into the bathroom. That's weird. Should do that to me, even if I don't know about it. Someone's in the bathroom right now. I can feel it. CVX, Schwab. That was 117. Tesla. Schwab. Was this when we did Charles Schwab? That was that long ago? Oh, this was before earnings? This can't be. June. Yeah, oh shit. Okay, so. Oh, wow. Beautiful. So I can already, yeah. Oh yeah, this was that setup. Oh my God. Yes, this was this one we got to go over, and this is a great one to take a little break on. What was about the yeah listen, yeah, KSS, same shit. Nice to see everybody here. Thank you, Potter, for doing this. I had a question regarding the conditions of the market, and if you notice that there are certain times where the system might falter a bit. Downside trades with punch downs are less clear in bull markets. In bear markets, upsides can, I'm not going to say fake you out, because the levels pretty much hold when, especially in a bull market, but where it will lead you to believe that's where it will likely go. So you want to listen. It's just like I've used this metaphor before, but you know, you're traveling with the food. You know what I mean? Native American style. We are literally traveling with the money. We're following that. And so why go against it? Why go against it? Why be a settler? No, I'm just kidding. But seriously, you know, this is one of those scenarios where if you or that would be one of those scenarios where if I'm going short and the market is long, I have to have a good reason to do that. Yeah, you're literally swimming upstream or downstream, and you go with the stream. It's just like, why, nobody's asking you to be a hero. No heroes here. It's go with, okay, we're building in the right direction, got empty space here. The overall market has been holding up. When it pulls back, does it bounce and hold? Okay, cool. So, and if you go look at the cues, you go look at SPY, like, sure, we see our pullback, sure, we see the profit taking, but those are bought up. We're in a bull market right now. And until I see, like, so like, you might be like, well, that doesn't make, where the fuck did you do that? I have areas that I would literally be like, yeah, that's where, if I see a short opportunity anywhere else, if SPY loses that, ugh, disturbing. I would play anything to the downside. What is that? Call spaces. What's underneath you? 558. If that triggered, which it didn't because it bounced really hard, that's where I would go short. I would need to know that the market overall is breaking down, is universally, because remember, the S&P and QQQ are representations of a ton of companies. So we can trust that if they're moving down, even if maybe the individual equities don't immediately follow, they will. In fact, I've seen a lot of individual equities pulling back while SPY and the Qs do not, or have not. Damn, SPY. Oh, this is... Damn. That was a good ass. Oh, I remember this. I remember the day. I remember that. All right, let's see here. Be nice to see a hedge play out, play an earnings trade. That makes perfect sense. And another thing, and this just popped up in my head. The goal here is for you to be independent. I don't expect anybody to do that in the first 6 to 8 months. So, if you're having to, continuously drop your charts, or is this the goal here is for you to be able to identify a good setup. And so repetition and actually, so this is something that not a lot of people make this adjustment, but when you're in the beginning, or when you're starting off, or even maybe you're restarting, the only money that you should be taking with you is the money that you literally are totally okay with losing. Like, you are acknowledging that you are in that part of your journey, that you're learning. That, just like you just got this job. You wouldn't go to ask your boss for a raise on the second week unless you really got some narcissism issues, but you would probably not do that. So yeah, just 1 second. I got you. But with that being said, if you can't identify a good setup, and I can't, like, if I could put you on the spot right now and I'm like, give you 5 stocks and I tell you which one, or give you an hour and say, go find at least 2 setups that make perfect sense. If you can't do that, or you feel like you would be, then you're still learning. And you shouldn't necessarily try, like, you're going to lose, and you should already be accepting of that. But the goal is to learn, right? Is to see a good setup. Okay, I think this looks good. Run it by other people. Okay, we're all in agreement here, and then you take your trade, right? Because you are using the people inside of this Discord and myself to bounce ideas off of, to confirm that what you're thinking is right, so you're not moving in the wrong direction. All right. So with Schwab, this was an IV if you want. Oh, whoops. This is probably one of the most exciting setups that, I mean, just from a teacher's perspective, just a beautiful representation of what we do. Okay. So here, let's do this really quickly. Oh, no, not that one. Okay. You could screenshot that if you want. Same difference. All right, so this was kind of reminds me of Coin, the perfect earnings setup. Very hard to lose on this. And these next earnings season, we'll see it again. We'll see it again. Opportunities that look like this. So I want to walk you guys through this one very carefully because this is just a really good one. So first of all, we started looking at this play, if I'm not mistaken, when it was a green candle shooting up into 75. Now I wasn't able to grab this. And I'm looking at when these people purchased these Schwab calls. Yeah, it was closer to the 15th, which is right around here. Now, the idea here is that my strategy is where we were at going into earnings set me up to win no matter what. Box above and box and empty space below. Box to box, right? Now, most people with normal brains are not playing as far out of the money as we are, which allows me to typically buy contracts that are pretty inexpensive. These were ranging from 25 to 36. Some people bought them for 29. Yeah, so, oh, never mind. That was a different one. No, yeah, that's 29. Yeah, 29 bucks. So this has the setup that provides both opportunities, both long and short. So and this is, just wait, we're not done yet. Empty space above, empty space below. Trigger. It's how you think I'm feeling, right? I'm going into this opportunity. I'm thinking, wow, not only did we have consolidation, but we just dropped down into consolidation. And how many times did we hit that gap, which is cost basis? 1, 2, 3. So typically when I start to get into a setup and I see it's moving, I'll buy it way before, a couple weeks or a week before earnings, something like that. But I do pay attention to the price action, right? And sometimes the answer or the inevitable outcome is easier to anticipate based on how price action reacts with what's around it. I can remember a Tesla earnings with empty space underneath it. That day it wicked down and then just held its floor. Did nothing else. Didn't go higher, just held the floor. And on earnings, it had spent 7 days in a box and exploded. Nothing up above it to stop it, just a floor being held. In this case, you go down to cost basis. It's still a mechanical machine. It's still going to keep moving how it's supposed to move. You tap the 3 times. You reclaim the floor. Reminds me a great deal of Mara. You reclaim the floor. You're up against cost basis now. That is without earnings, a punchback play. We are looking for a new high at a candle close or open above that high. Okay? And what is above me? Empty space. Now, this is also fire because we have a catalyst, which makes this more exciting. We have something that will provide the volume to get all the way there real quick. So maybe we shorten our expirations up, right? Or we buy it for that week, maybe a couple of weeks before we buy it for that week. And we're looking for those target-based contracts. Now, this doesn't have earnings yet, has earnings here. Look at that. How do you fall is how you rip. You got a punchback before earnings started. You got a retest of the top of that box before earnings started. And you're at the 50% mark going into earnings. Eat my socks. We're going all the way. And this was absolutely fire. Now, let me tell you about an adjustment that I made because of this. I take straddles. You guys know this. But if I see a direction like Nike where there's only room up, my hedges are for the absolute worst case scenario, like Lulu. Absolute worst case scenario. So if Schwab gives me a punchback and I already bought the puts and the calls at the low, what do you think I'm going to do to those puts? I'm going to get out. And I'm going to buy them back for whatever target I see underneath me Even in this scenario, I'm gonna buy a few just in case, because if it costs me $60 out of the 500 I put in there, whatever, I'm gonna make a bag. I chalk it up to the game. I dipped. I got out of the puts. I added to my calls. And then before earnings, I took a hedge. And it was beautiful. And this is the same setup that you guys are seeing. Obviously, this is super clean. I mean, God, just literally textbook every which way. Bounces off of cost basis, reclaims of the floor, candle closes on the floor, candle closes pushing above cost basis outside of the box, then you get a new high, that's 50%, then you open up at earnings and you filled up every little bit of air. Because if I'm being a, look, watch this, hold on, before you think, when I say the first green candle to my left in the most recent price action, I really mean it. That's where it started, right? That's where the big dump started. So that's where the remainder of that empty space go to the 4 hour. See? Cool shit, man. It's good shit. All right. Oh my God, I thought my camera froze. I was about to lose it. Everybody, how are we feeling? Those of you guys who are just here to visit, week travelers, how are we feeling? So far, going through these setups and going through these gains, we can all come to the conclusion, I think, that this is the same shit. You know what you're looking for. And that right there is going to, you might have had a shotgun, you got an AR now, right? You got accuracy. We're not just blasting a chart. We know what we're looking for. Now, being able to identify a good set, we're not done. You know, we're gonna get there. But just doing the few that we're not even halfway through January, I'm learning more, but also seeing big holes in my trading style. Roger that. Switch on the Glock. I don't know. That's a little inaccurate. You ever seen people shoot those things? You need two hands, Bubba, not one. It's cool when it's one hand. It's not cool when the barrel's looking at you. Anyway, so perfect. How do you determine the contract size for the hedge in this setup? So that'll depend on what I take to the upside. If I put 500 and my bias, if I have no bias, then I might do 1-to-1 both sides. I'm far out of the money, low risk. If I see a determined direction like Nike, then I will absolutely, you know, I put 1,200 into that and I spent about 180 on the hedges. It's the worst case scenario, right? Where those 100 or those, you know, $16 or $5 contracts would be worth 900, worst case scenario. And I've had that. Lulu was kind of that, except for I basically had a put and a call on both sides. So, but it was that, like, you know, I don't really know if this thing's going to dump. It could, it only has one bounce, but you know, lo and behold, I ended up making money out of that. So, all right, but cool. All right. So, and if you're not speaking up right now, if you're confused and you're not asking questions, you're fucking up. I'm right here. A lot of you guys be asking for one-on-ones and shit. You don't need it. I'm right here. Pop us here. I'm just kidding. So if it starts ripping, how do you respond? How do you respond, close, or move the hedge up in case of like the? So yeah, I would move the hedge up or wait for that price, and then that hedge target, yeah, would adjust. So I think at that point I was taking cost basis targets, which was 73.55, which would be the worst case scenario. So yeah, I'll reposition myself to. And earnings, you know, AB is doing this right now. Everybody in here, that's 100 plus people, so hopefully. But AB right now is, I think he's doing a $5,000 account, and he's trading only earnings just to see how this works out. He's trading only earnings, and it's on Instagram. You can follow him there. He's in this Discord. It is. I'll tell you the handle really quick. I think it'd be cool if you guys all did follow him, because I think it'd be good to watch. It's AB lowercase underscore trades underscore earnings. AB trades earnings. What do you mean? If I already have contracts and we are out of the box moving up, will you add more contracts? I try to take what I mean to take when I take it, especially if the stop loss is available. But that does, Diddy, all depend on what's in front of me. So if I have a box ahead of me, I need structure to enter. That is going to be a plain and simple answer for all of you. So if you see it, we gapped up, we're in empty space, and we straight rip, no, I can't. I'm sorry. I wouldn't do that. I wouldn't enter that trade on it, so I'm not going to add to it. If we have an orb or something of that nature, cool. Don't okay me. Do you just okay me like a mad girlfriend? I don't like that. Just like my dad. All right. Cool. I think yeah, leave me alone. I think that's good. Good time to take a break here. We'll come back to just take 5 minutes, go stretch, go look at something other than your screen for 2 seconds. And we'll come right back. I'll just for uploading purpose. Damn, holy shit. It's been 3 hours already. Oh well. All right, we'll be right back.